Good afternoon, everyone. Welcome back to Short Verticals. I'm Brett Crowther, and we have some good stuff to talk about today. I mean, we're looking at this market that's been dipping. Will it continue to dip, or are we possibly looking for a rebound? What kind of trades, paper trades, is this potentially setting up? How did our trades do from last week? Lots of questions to answer that we're going to get right into. We do have Ben Watson, good friend of mine, on the chat. Thank you, Ben, for filling in and helping out on the chat. He'll be there to take care of you. Make sure your questions are answered there in the chat. But before we get into those things I just mentioned, we've got to cover a couple of disclosures. So give me about 15 seconds to go through this. Do you remember that options carry a high level of risk and are not suitable for all investors? Information here is for educational purposes only. Paper money applications for educational purposes only as well. Short options can be assigned at any time, regardless whether in, out, or at the money. Investing does involve risk, including the loss of principal, and past performance is no guarantee of future results. Also, there are some definitions for your option Greeks. Also, if you're using a stop loss, do understand that it doesn't mean you'll get filled at that spot. It does turn into a market order. You can be filled at a different price than where your stop could be. Okay, so with that said, let me bring up our Thinkorswim desktop software, and let's just discuss kind of some things that are going on in the overall market. And by the way, let me just actually give a shout out too. We got Will and Tammy and Ravine and Chris and Richard. Good to see you, Richard. A lot of you. Yeah, good to have you aboard today. It's always fun to have you here week in, week out. So this has been interesting. You know, we talked about what was going on in the overall market last week and noted that it was sideways. And so I just want to ask, what do you think of since then? You know, has anything really changed? That is the question, right? I've had a lot happen kind of geopolitically, right? I mean, maybe not as much economically, but definitely geopolitically. A lot has happened since we talked last week. But what do you say about the overall market? What do you think the overall trend is of the market? And this is kind of interesting. Good afternoon, John. Good to have you aboard. So I'm waiting for, there's a little bit of delay in when you type those things in, so I'm waiting for it to pop up. But when I'm assuming it's probably going to be very similar to what we had last week, right? Which was sideways. And really that's it. Now, some would argue, hey, say, hey, Brett, but it's been going down, you know, like this, right? And yeah, let's change that color so it doesn't get hidden with all the other items in there. But yeah, it has been going down, right? Overall, but in a longer time frame, I mean, it's really been kind of going sideways here. It's been bouncing between the support and resistance, kind of forming this channel that we've been seeing it bounce between. Now, here's the deal. This is really interesting. It broke way below it 2 days ago, yet look at where it came back and closed. And so I just bring that one up to also illustrate this point right now that we are also seeing kind of a similar situation at the moment where it's breaking below that support level. You know, but where is it going to close? That's going to be the question, right? Is it going to close low enough below that we could give an actual confirmation of a break below support, or will it come back up? I mean, we still have 2 hours to go, and a lot of times it could even be in the last half hour. I don't know how many times I've seen it in the last half hour. It's run back up. And so all that I want to say with this is let's not be premature in our judgment. Let's not say, okay, you know, just because it's coming down to support doesn't mean it's broken support. In fact, it gave us kind of a bounce yesterday, a hammer with a confirmation above that, and today, yes, it is giving back some to this point. But then let's see where this closes and see how that potentially alters it. Now, one thing I want to say with this, if in fact we do get a break of this channel here can be a valuable tool, because I like to call it an echo channel. I don't know. Generally speaking, you can look at it to possibly go the distance of that channel again. So what I'm going to do is actually, not do that. I'm going to just trying to erase that and hit the wrong button. Let's get rid of that. Come back in here. I want to right click and duplicate that channel. And by the way, when I drew the channel, I use this tool right here, just the channel tool, right? You just click on that and you just draw a line with that, and then it'll draw a parallel line like this. You know, so you just can draw that channel. And that's what I did. I just drew the highs and lows in there. But if I just right click on that, I can duplicate that drawing and use that as a potential target down below. Now, so if I duplicate that, down here could be a target at 65.90, we'll say, somewhere in that ballpark, if in fact does break it. If it bounces, obviously we're looking for it to come back up here, and then if it breaks above that, then we're looking forward to possibly run up to around what, 72, I believe. Yeah, 72, right up in there. And so those are some potential target areas depending on, which way stock breaks out of that channel. And right now it is threatening the bearish side, but has not accomplished that as of yet. I want to be very clear on that, despite what we may feel. And that's the big thing is, you hear these talking heads and whatnot. And I always find that talking heads are bearish today, it goes down, and bullish today goes up. But it's like, I don't want you to repeat what I'm seeing. I want to know, what we're really seeing kind of behind the scenes. Anyhow, it's important to remember, let's see. Just checking to see if there's any comments in there. Now we're good. Okay. All right. So now let's do this. I want to look out, and I want to actually use this for part of our play today. So let's look at this. When we're looking at, if I look at the market here with the SPX, it does give a little bit more of a neutral to bearish indication, right? But it was interesting as I was looking through examples, trying to find out, what am I going to talk about today, and how are we going to, what stocks are we going to look at? Well, let me show you a handful of them and see if you guys can see a pattern here of what I was seeing. And so I saw something like this, like Baker Hughes. And what I noticed is Baker Hughes has had a really strong run. And it seems like after a really strong run like this, where it goes from 45 all the way to about, 65, which is, a pretty good increase, right? That it needs to take a breather, right? And so it'd be expected to pull back a little bit. And that's what we're seeing, it possibly pull back to maybe a Fibonacci level, right? And how about MO? And I just grabbed a whole bunch of stocks. I was just looking at them. This one also had a pretty good run, maybe pulling back to a Fibonacci level. It's not down there yet, but it had a strong rally, a really solid rally, which, legs get tired when you climb a hill that steep, right? Maybe needs a breather after that. How about Coca-Cola? Looks like that one ran from 67 all the way up to 81. Really strong run, through really January, and possibly pulling back. It's pulled back for 1, 2, 3, 4 days. Now, is that bearish or is that still bullish? I'd look at that and say, hey, it's overall still making higher highs, and we don't know yet, but potentially higher lows. But overall, at this moment, still bullish. How about NEE? Possibly running from a support to a resistance area, pulling back to a Fibonacci level. Again, had a really solid, strong run. How about, oops, I was looking at the wrong one here. How about MRK? And this one coming back maybe to a level of support. We'll have to see. That one's possibly breaking through support, but definitely sitting on a Fibonacci. So this is the 50% Fibonacci retracement level, which, when you get a pullback, that's potentially where we're looking for it to pull back and find some support. And so I find that really interesting. If we look at, we have a MACD down here, an 817.9 MACD, that's down about as far extended as it typically will go, and giving us an indication that's it's a fairly significant pullback that we've seen on this, on the bearish momentum, meaning it doesn't mean this has to cap out right here, but I'm just saying it's extended. If you're going to say the bearish momentum, where is it? It's kind of extended, right? And so obviously it can go further, but it is definitely pushing, its past limits, right? How about Corning? Are you starting to see a pattern here of what I was just going through stock, and I just, scan through the charts. I can find one after another. This was a 38% retracement, possibly finding some support here, but you're looking to, it hasn't bounced yet, but basically pulling back to a support level. Well, here's one we already have it, Texas Instrument down at the 62% level, right? Amen. I have a long list. I could do this for the next half hour. Keep going on. You can see where this is pulling back, possibly breaking now. It's showing some more weakness in the fact that it broke through. It's right now sitting below that moving average, but it's also between that 50 and 62 support level on the fib, where that's from a Fibonacci standpoint. That's where we'd look for it to find the support, right? STX Seagate. What do we have here? Sitting right between that 62, right around that 50% retracement. IWT or ITW, say that correctly. Again, solid run from support up to resistance, pulling back to 38.2%. And this goes on and on and on. And so there's been a whole bunch of stocks that are kind of in this situation where they pulled back. And when we see that pullback, we tend to think, wow, look out, you know, it's bearish, right? I mean, because you know, I mean, obviously this has been from what, you know, February 12th, and so we've seen 3 up to 4 weeks roughly of retracement, and when we see day after day, week after week that retracement, then we start to feel a little bit more bearish. But if we look at this maybe in the bigger context of everything, maybe not so much, right? It had rallied strongly, needs a breather. And so when we see some of these retracements, we see some of these stocks that were probably, if we look at the RSI or stochastics or some sort of indicator, you could have very likely have seen them. In fact, let's just throw one on just for the fun of it. I was going to say they're probably in the overbought zone. So, all right, it sounds like my camera is acting up, and so we're going to remove my camera. So apologize, you can't see my pretty face, but maybe it will work out better for you in the long run, right? But here's what I was talking about, is if we throw on this RSI, I'm sure if we go back through a lot of these, we'll see that it was in the overbought zone. So it's just in an extreme area ready for some sort of retracement. And so again, let's put this in perspective of the overall, you know, pressures that we're seeing. All right. Okay, just make sure I'm not missing anything. Is this from a scan? What is the criteria? No, it's not. The question is, where am I pulling these stocks from? Really, it was just I actually did a scan. So the question is, a scan? Yes, but it's a scan I did in class several weeks ago, where I was just looking for stocks with tight, you know, option spreads, right? And I could go back and show you that when I have to find it. Maybe I can put it in the comments below after the class. But it was really just talking about just looking for high volume stocks that, you know, had or above, I think, well, I want to say like $30 or something like that. But really, it's a lot of the S&P 500 stocks, generally speaking. And so it really wasn't anything special, but I was just kind of finding stocks that I wanted that tight bid-ask spread. And I was just going through those, you know, just looking through it and saying, okay, you know, what's coming up? And I just noticed this pattern again and again and again. Right, and we could use some of these for some potential trades, and there are also some on the other side too, like Adobe. Adobe was interesting because it was running down. Now it's rallying back up, you know, possibly to a level of resistance, and maybe we could play that to the downside, you know, if we can get a bounce off resistance. What else was similar to that? IBM. Here's a situation where it dropped down, rallied back up, sitting at that 38.2% Fibonacci level. You know, possibly could break a little bit higher and see what happens there. Uber. Ooh, Uber ran back up. In fact, maybe we make a play on this one right now. So we have this downtrend right here, right? Like this flag pattern, rally back up. And now we're starting to see some retracement from that 38.2%. And it'd be nice to see it roll over here. We're actually getting some negative momentum on the MACD, suggesting that, you know, it's kind of peaked out and it's coming back down. So it's waning in its bullish momentum. Hey, Mickey, good to have you. Mickey, we got to look at some. I'll bring some stuff up for you in a minute here. Mickey was pinging me on my X account and talking to me about some things, some of the stuff we talked about in class. And so I'll bring some stuff up there. But hey, let's look and see what we have here as a possibility for. And by the way, Mickey keeps pinging me about, you know, I'm just doing bullish trades in the classes for examples. Well, let's do a bearish one, okay? So let's take a look at that. So this one we're going to look for a bearish play here, maybe looking for it to stay below the 76, 77 area. Let's see what we can make of it. So we got Uber up here. We go ahead and look at our options. In fact, let me change this so we can see this just a little bit better. I'm going to go up to setup and then to application. And then from there, I'm going to go look and feel. I'm going to change it from medium up to large. I think that might help us see it just a little bit better. And so now hopefully it's a little more clear for everyone. All right, so let's see what we have here. You know, looking at the days till expiration, we have, you know, some of these, this is getting kind of tight on the March, right? 15 days. We're really looking for about 30 to 40. And so we're looking somewhere in here. And if I'm looking at between something that's a weekly versus the standard, you know, third Friday, generally speaking, the third Friday will often have tighter bid-ask spreads. And so we want to tend to look to that first and just see, you know, does that work or not. So let's take a look at the April time frame. Oops, let me get off of that. We're going to click on the April again. Here we go. and see. So we're talking about roughly at 77. So here we have the 77. So let's see what happens if we go out and sell the 77. And right now we have 2.5 wide strikes. So sell the 77, hold down the control key, scroll down and click on the 80 on the ask. So we're going to bring in $3, and then we're going to looks like we're going to buy the other one about, somewhere in here about 210. And so roughly speaking, somewhere in here between the three, if we're getting the midpoint here, selling for 310, buying for 210, there's going to be roughly $1 credit. Let's try to push that up and see if we can get $1 out of that. Might be pushing it a little bit, but let's see what happens here. And so if we get $1 credit, and remember the spread between this is $2.50, right? So again, we're selling the 80, we're buying the 77.50, and so I'm sorry, we're selling the 77.50, we're buying the 80 rather, because the stock goes up, that's where we're getting in trouble, right? And so this is our protection one. And so, basically here's our risk. The difference between these two, which is $2.50, is our risk on the trade. And so $2.50 minus, we can do this in our head, $1 credit, well, that's going to be a risk of $1.50 then, right? And so if we bring in a potential reward of $1 and we divide that by the risk of $1.50, we're going to get about a 66% return on risk on that, which is fairly healthy. And then this is something that is interesting, because we do have the probably, if we were to look at these, the implied volatility, I would say, would be a little bit more elevated on a lot of these, and that can lead into some better premiums, right? And so I've noticed that as I was kind of poking around, that the premiums were looking a bit more juicy than just a general bullish time frame. So, all right, so that's looking good so far. The question is, if we go ahead and place this trade, this paper trade, how many contracts would we do? And if we have $1,000 worth of risk in this class, and we're risking, what do we say, $1.50 on this trade? Well, it's going to say we can get in the devil trade 6.66, huh? Well, we'll just round that down to 6. So we're going to do 6 contracts. And so we'll go 1, 2, 3, 4, 5, 6. There we go. Now, I'm not going to place a stop loss on this, and I explained that last week. And so for those of you who want to go place stop losses, I'm not saying don't do it. I'm just saying if you do it, please understand what you're doing to your probabilities, because it can alter the probabilities. Meaning, in this trade right here, as we're looking to enter the trade, we're looking for it to be below 77.50. And if we're using, we can look at probability of out of the money. Well, the probability of out of the money on that is about 60%, right? And so we're looking at this higher probability trade. But if someone were to go in there and say, okay, but how about then I'll set a stop loss up in here, maybe 78, 79, somewhere in that ballpark, right? Saying if it comes up there, I want to get out. Well, let's look at what that does. So the probability of touching that area, so 78, 79, here's 80, it has a 63% probability of touching 80. Now let me explain what that means here. Let's walk through this. So we hop into this trade, and if we don't touch it, generally speaking, we have the 60% probability of working out according to the probability of touching, or probability of expiring, right? But remember, that doesn't mean the stock is going to stay below the 77.50. If you have that 77.50 that we need the stock to be below, it may not always just kind of hang out below there. It's kind of like right here, may do this, may do that, may go like this, and in the end be below it at expiration, but that doesn't mean it has to be below that 77.50. It can bounce around. And so the question is, if it bounces around and we say, well, you know what, if it comes up to 80, then get us out of the trade, maybe 80 is right here. Well, what's the likelihood of it doing that? Well, the likelihood of it touching 80 is it's changing here. I think this is the probability of touching is 63. It's 63%, which that means that if we place a stop loss there, we'd actually have a 37% chance that it does not touch the stop loss, right? And so our probability is no longer 80%, it's 37%. And so I'm just saying, if you're going to use a stop loss, understand how that changes your probabilities on the trade. Okay, and again, go back and look at last week's, was that February 26th, I want to say, that webcast from last week. We talked about that. All right, so we're just not going to place a stop loss on this. I'm going to show you some other things that I like to just kind of keep an eye on it. We'll talk about exiting here in just a moment. But let's go ahead and finish off this one. We got our 6 contracts. We're good to go there. Limit order, confirm and send. Just make sure there aren't any items to read in here. Talk about potential profit of 600, potential loss of 900. That fits within our 1,000. Go ahead and send that off, and we'll see if it can get filled, and if it bounces around a bit. In fact, if it just comes up a little bit, that could get us filled on that trade. Now, as we're talking about trades, let's go back and look at some of the ones that we had on tap. And so one of the first ones was KDP. Now, KDP, we're showing a bit of a loss here, and so let me walk through that and talk about what's happening with it. So let's look at KDP. Go over to the chart. We're going to type in KDP right here. Let's see. So hang tight. Looks like I got a screen share issue. Let's see if it that resolves itself. Let's see. Let me know if my screen is still working okay. You see me move it up and down. All right, tight. All right, we back with the screen working again? All right, okay. Looks like I'm getting some feedback that we're okay now. So sorry about that. Hopefully we don't have any more technical issues. Last thing we need is another thing today on a day that's volatile, right? A little more volatility in the on this too. All right, let me remove some of these so we can get a little more space on this. Okay, but so KDP is interesting. Now what we sold is a 30, so we need it to be above the 30 by this time, which is the 3rd Friday in April. So the question is there time to get back up there? Yes. Now, does it look good? No, it doesn't. But if we apply what we were talking about earlier with Fibonacci going from the support level up to this resistance, this is interesting because look at where it is. It's at that 62. This is an area that could potentially bounce off of and move forward. Now, this is also one of the challenges. When we hopped in this trade, I was talking about it was pulling back. I said, well, typically speaking, it'd be ideal to see it more, have a bounce with some sort of confirmation, some sort of a morning star. But you know what? You don't always get what you want when you're teaching the class. And so, by the way, yes, I did submit that Uber option. I don't know if it froze, my screen froze, but I did submit that Uber option. So it's sitting out there looking to be filled. But as this one is sitting here, this is a potential spot. So last thing I want to do is remove the trade right at a spot where, if it is to bounce, this would be the last area where it could potentially bounce, according to the Fibonacci's, the best next area, right, where it could potentially bounce and, get out of the bullish trade at that point. Where, how about, if we can watch it bounce? We have time. And that's the thing, is these time trades are forgiving as long as they don't completely fall apart. It is a little more forgiving and could, possibly work out. And so we're going to say sometimes we have to sit on our hands and be a little bit slow and cautious on these. And so we're going to let that one ride still. Now, going back to see what else do we have? Well, we have Starbucks. Then I got to talk about Netflix. So Netflix we're out of, but I got to talk about Starbucks. Let's go to Starbucks. This one's being a pretty good winner. Let's check it out. SBUX. And on this one, we sold 3 contracts. And we're looking for it to be above 95. So we drew this in here. Here's the 95, right? And we need it to be above this level by the time it gets into the 3rd Friday in March. And so this one's a little bit closer. So we don't have quite as much time. This one was interesting because when we're looking at this was kind of bouncing off the support level. And so you can see on this one, it bounced here, and then we're looking at that 3rd bounce is right there when we got in. And so far, it's kind of like channeled around and found some resistance and came back down, but it's kind of bounced off this. Now, here's the thing, this symmetrical triangle that I have drawn in here, that's no good. That's no good. It was setting up, but it's no good. Now, why is it no good? This is important to understand, is because when you're looking at a symmetrical triangle, typically speaking, we're looking for that to not go more than about 3/4 of the way from the beginning to the apex. And so when you get in this last little bit here, technicians will often say, hey, it's falling apart. That's kind of like, okay, the trade should have broken out prior to getting into that last little bit. And so basically the idea is the pattern itself is kind of the importance of it, and the everything is kind of waning. It's losing its validity in some ways. And so so I wouldn't necessarily look at that, but still, regardless, oh, there we go. There's our Uber. Sometimes, it pays to be patient, sit there and place it and wait. But so far, that's been holding, right? And so that's looking good. Now, here's the deal: is may give it a couple more days. We still have a little bit till expiration, and so we'll just give it a few more days. And if I were to close this out, we're not quite to a spot where we're getting a good chunk of the credit. We are getting some, but I think we sold that. We'll have to go back and look at that, what we sold that for. But we could buy it back now for about 90 cents on that, and we sold them for $1.17. Yeah, so see, there's still a lot of value in those contracts, and so it's sitting there, is rallying up. I mean, it's holding up on a day when the market's down. So we're going to let that one ride. Okay. Now, one more that I want to talk about before we go over and look for some other potential trades is Netflix. Now, this is where it's interesting because we want to have these finite rules of like always do this and never do that type thing. But you know what? The market doesn't tend to play that way. And this is, I think, a prime example of where we have to be flexible. We have to look at what's going on out there. What adjustments do we need to make? Okay. Mary asked, do we have a diagonal resistance breakout on Starbucks? Technically, yes, it did break out of that diagonal resistance. As far as the symmetrical triangle, it really didn't perform. It should have broken out earlier, but it is holding support and broke above resistance, yes. So on this trade, this is one where we zoom in here, is in a downtrend. We were noting that downtrend had weakened, it had broken above the downtrend line in here, broke above the moving average that it had on there. And this was actually a long-term old resistance support level, right? That had broken above that resistance. And so there's basically like these three different levels of resistance, if you will, that we thought should hold it down, but it broke above. And so at that point, we're like, okay, let's take a play on this. And so we happened to get in that trade. We sold 7 contracts as the 82 strikes, so we needed to be above 82 by the 3rd Friday in April. So there's still a fair amount of time on that one, right? There's still 40, almost 50 days roughly, and we sold them for 70 cents each on that. So that created that 490 total that we could make on that play. But so what happened? Well, the next day it gapped up. And so what happened then is we had the opportunity to buy it back. Let's grab this and we want to dry this up. We could buy back, well, that's big, for 27 cents. All right, 27 cents. And so on that 27 cents, if we were kind of to, prorate that out, what is that? 27 cents times 7 was $301. Let's see. Let me grab my calculator. Let's do the calculator here. 27 times 7 contracts equals 189. So here's the deal. We basically sold it for $490. That's where the total position was. We could buy it back for $189. And so that gives us a profit of $300 in one day. 300. So keep this in mind. That gives us a profit of $301 in one day. Now, there's still a potential of an additional, what is that, $189 that we could gain, right? The difference between 301 up to 490. So there was potential for a little bit more, but here's the deal. I mean, we made 60%. I think that's right. Let's check that again. So if we made 301 divided by 490, yeah, 61% of the total profit potential in one day. So now the question is, do we wait for 6 weeks or so for that to finally give us the rest of it, or just call it good and go find something else? And so the question, here's a great question that comes up. Stiggold says, hey, why don't we just let Netflix expire and keep all of it? And that's a great question. the answer really is have you ever seen a stock that was there looking like you had it all? It's like, oh yeah, that one's done. You know, I just need time to expire and then I'm good on that one, right? And then something comes out of ring, right? And it drops down. Things can happen. The unexpected can happen. And if you trade long enough, it will happen to you. And then you'll start to say, you know what? Maybe when I get a good chunk of it, I should walk away. And it's just kind of this balance between how much more can we make versus how much time is left. And there's just a ton of time left, but how much more we could make. And so that's the idea, is if we can walk away, there's just very little upside potential and an awful lot of downside potential and an awful lot of time for things to go wrong. Does that make sense? So when there's a lot of time for things to go against us, I mean, it can go for us, but there's only a little bit for us and a lot against us. That's sometimes a good time to walk away. And that's where Apple, so yeah, I remember this. Let's do this. APL. So we had a trade on Apple, and I want to say it was something like this, where it was kind of like it was looking good. Like, if I can't remember exactly what it was, but maybe this would be a good example, saying that someone got in like right here or something like that, right? A good bounce or something like that. Got in right here and is looking good, and all of a sudden, whammo, you get a big down day like that, and it just falls apart. Or even sometimes, it can be rallying up, and you get in a trade, and all of a sudden it just starts to, should bounce off support and just continues to drift lower and lower and lower. So things can move a lot. You got to be careful, and that's why. All right. Let's see. Just want to make sure I got all the. I'm missing Glenn Fried. Okay. All right. Let's check out some other things in here. We made one trade, and so let's look at one paper trade. Let's look and see if there's anything else we can look at. In fact, I actually came across. We were looking at some of those stocks. Let's look at MU. Was it? My friend. Oh, interesting. It's pulled back. Darn it. This one was a little bit better earlier. Maybe we still go with it. Let's see what happens with this. We got this earnings announcement. How far out is that? 318. So that's right after. Looks like I think the expiration on the Marches are when. The Marches are the 20th. So it's right before. It's going to be a little bit of a conundrum. I was looking at Micron coming back and finding some support. Now, it was a little bit lower earlier, and so I was looking for it to come back up, and it's done that. So this is also one that's kind of winding up, right? Looking for a potential bounce and rally back up. And I don't know, maybe we could get something on a very short-term basis. Let's just see what happens. That's what a lot of it is. It's just kind of running the numbers and seeing. We're looking for it to be above a 381. So if we go over to the trade tab, and we're going to look at the March just to see if there's any juice left in there. There's not much time, but sometimes when you get these volatile days, you can start to squeeze something out of it. And so being above 381, maybe we look for something, kind of playing this quick, being a little bit more aggressive. Because if we're looking at, let's see, hold on. Let's see, looks like my screen is just giving us a hang up. So what I'm going to do is I'm going to close down my feedback on this, and just believe that Ben is taking care of those questions for us. And hopefully that'll give us a little bit more bandwidth for whatever's going on here. What are some of my, I don't know. All right, is it working yet? Do we have, I can still read the chats, so if you can give me some feedback. If you can help me out. Let's try pulling up this again. We may have to cut this short with all the technical issues, unfortunately, but let's just see what we have with Micron. So we have where were we? We were 380, right? This is what I was talking about. We could look at something a little more aggressive, is selling the 380, which is just below support. Now that has a probability of out of the money about 50%. The delta is 44%. This gives us the idea of which when they say delta is an exact probability, this is kind of this estimate of out of the money probability. Or we could go something a little bit more conservative, looking for something with a higher probability, right? And so that's a possibility. But really, I'm thinking of this as almost more of a bullish quick play. I'm not looking for the time decay to totally erode. We're looking for really just a pop off support, a rally up. Well, we'll get more bang for our buck on something a little closer to at the money. So let's look at this 380 and see what we got there. So let me get rid of our arrow. And I don't know exactly what it's going to come up with, but we'll just check it out. So if we do the 380, hold down the control button, and this is a 5-wide spread. We'll go to 375. Click on that. This is giving us what, 227. So I'm not totally loving that. What I'd like on this is a little bit more if we're getting a little bit closer to 50%. So just basically, I don't know if my screen's frozen or not, but basically it's this. If we're getting closer to 50%, probability, probably looking for more of a 50%, risk reward, right? On this, and right now it's a little bit below that. When I was running it earlier, it was close. It was actually more than that. It was quite a bit more than that, and so some of that volatility must have bled off and kind of hampered it. Well, here's the deal. We've talked about what the market is doing. We've talked about we place a paper trade. We talked about our existing trades and how to manage those. One we're already out of, the Netflix with a big profit in one day. One's down, but we're going to hold on to it because this is a potential support level. And the other one, the Starbucks, we're just going to wait a little bit. Let's see if we can squeeze some more profit out of that. And then, we looked over several charts that could potentially be some, give us some bounces and some potential example trades that we could use down the road. So I'll leave you with that because I don't want to try to teach when my screen is frozen. But I got to say a couple things. First off, stick around for Mike. Mike Fairborn is coming up next with Think Script, and so covers some tremendous information in that. So please check out that class. But also, I won't be here next week. I have one or two things. I don't know exactly where I'm going to be. One, I have jury duty. I'm supposed to show up at the courthouse on Monday, and if I'm selected as a juror, I'm going to be out next week for our class doing a trial, right? Being a juror in a trial. If not, if I don't get called, I'm supposed to go to Atlanta at the workshop, and so hopefully that's the result. I'll get to go to Atlanta, and if you're around that Atlanta area, please, be fun to see you at the Stocks and Options workshop there in Atlanta. All right, but with that, we're going to cut it just a little bit early, just a few minutes early, the technical issues. But thank you for bearing through with me as we got through. At least we got the most important stuff. We got the analysis, we got the trade, and we got the review of the positions. And so thank you for joining me for that. And, check me out on X. I'll be there all week, and hopefully I'll be able to see you in Atlanta with Ben. And Ben's going to be there as well. And thank you, Ben, for helping out with the chat. We always appreciate Ben in there giving us a boost. And so with that, I'll let you go. Have a good one. Catch you next time.